Hi, we're back. I'm Don Baillargeon. This is Money TV. Thanks for staying with us. I'm joined in studio now by Mr. Matt Chipman. He's the editor-in-chief of the Green Baron Report. Matt, always good to see you.
Good to see you too, Don.
We were having a lot of fun during the commercial break talking about all the things that we would do to fix the country, but it's just been an interesting week. I mean, we're looking at, well, the bankruptcy, essentially, the Chapter 11 filing of Chrysler. 15, 20 years ago, that's something we never thought would have happened. We're looking at the looming potential of a bankruptcy filing by General Motors. I mean, the way the bond debt restructuring thing is going on right now, the government's going to end up owning 50% of the equity in GM, with the UAW owning 39%. I'd hate to be a GM shareholder right now. Well,
shareholders of some of the big cap stocks have really been punished this last year. I mean, you got the banks, you've got the car companies. Yeah. Used to be all the airlines, Right. I mean, we're used to seeing bankruptcy filings from the airlines because they can restructure their debt, find new bondholders, or restructure the terms and create new shareholders from their bondholders. So, yeah, it is surprising and kind of shocking to see the car companies going through this.
Well, yeah, and I keep going back to this. We keep coming up with all these solutions for car companies. I mean, we axed Pontiac a few years ago. They axed Oldsmobile, but none of these things that I'm seeing right now seem to be affecting the core problem. That is, they're not selling enough cars.
Yeah, I had a discussion yesterday at a meeting with a company that's developing fuel cells combined with hydrogen fueling, systems. And what the car companies made a big mistake with years ago was not owning the oil companies.
Right.
I mean, why wouldn't you want to own the razor blades if you're creating, a razor? So they made the mistake a long time ago. I don't think they're even solving it today. They should really be getting into some different, seeing the future of where things are going.
Well, you and I have talked about this on a number of occasions. I mean, let's face it, since October of 2007, when the Dow peaked at 14,000, we've seen just a tremendous loss of equity value in big cap stocks. There's a general consensus that the market has hit bottom, but it would appear that the small and micro cap stocks are the ones that are leading the recovery.
I think they are. I think we've seen tremendous activity now come into the small companies' stocks. People are now accustomed to seeing a stock trade under $5 a share.
Right.
You're no longer afraid to buy a stock that might be 20 cents or $1. I spoke about that last week, but it's true. I've seen some incredible opportunities, but also you're seeing the liquidity come into that marketplace. And that was what we had a problem with, for the last year, was selecting companies that didn't have liquidity. Now, we're still trying to find companies that we think will have that kind of liquidity and that are announcing fantastic contracts. And it's there, but
well, you hit the nail right on the head. People are no longer afraid of inexpensive stocks. I mean, it wasn't that long ago that with $5 you could buy Ford, GM, Citigroup, and have change back. And if a company is trading at 25 cents or 50 cents, not a lot has to happen to get it to 75 cents or $1. But let's face it, if you have United Technologies at $42 right now, a lot has to happen to get that back to its peak of 76.
Yeah, I mean, there are some strategies you can take to recoup some of that money through a sale and a 30-day wait period. But a lot of people are going to have to consider averaging down if you still like the company. I've seen some of these stocks slowly make their way back. There's a lot of news out today that the recession may end at the end of the summer. That means we're going to stop seeing the numbers decline at that period of time. Now, if the market is a 6-month predictor of what's going to happen, now you see why the markets are improving, but it remains to be seen.
We just hope that we can separate the spin from the reality on news items like that.
We're trying.
If people want to get a hold of you, learn more about what the Green Baron Report is all about, how do they get in touch?
We're going to be really active this next 30 days, so we really suggest people go to our website at thegreenbaron.com. Click any join icon. We don't share your email with anybody. It's safe with us, and we'll add you and start sending you our reports and our updates.
Okay. Matt, we always enjoy talking to you. Your insight into the market's valuable. Again, Matt Chipman, editor-in-chief of the Green Baron Report, and again, their website, thegreenbaron.com. Matt, thanks so much.
Thank you, Don.